Welcome back, ladies and gentlemen, to another Neostock video. I have not talked about this one in a long time. Neostock, we've been here before. We know what it likes to do. Okay, it's found a bottom at around 360. Has not come down there just yet. It is holding on here at around $4. It seems to me, and this is just speculation, it seems to me like we're finally just going sideways here. We switched to the monthly. You see huge pump in 2021, huge dump, because, you know, all of that comes back as selling pressure. It pushed it from 1 to 66, right back down to 360, where it's holding a bottom. So the lesson is things don't go straight up and things don't go straight down, right? Eventually things top out, eventually things bottom out. Well, we're on the other side, so thankfully we're not going to hold a big bag up here. We're smarter than that. We're going sideways here above this $3.60 level. And if we switch to the daily, you'll notice that we are above this 200 weighted moving average. Anything that's underneath that line, it's a steal. It's usually a good indicator of it's undervalued. Let me put it that way. So anything above it, way overvalued. You're probably going to hold a bag if you buy up here. Anything underneath it, it's a buy. Accumulate it for the next pump back above that weighted moving average, back above the 200 weighted moving average. That's kind of how you should think of it. Underneath it, it's cheap and undervalued. Above it, it's overvalued. And that's why the market pushes it back down underneath it. And it just rinses and repeats because we're going sideways, as I showed you on that monthly chart. So it's time to abuse this one. Abuse its pattern. Right? Why not abuse the pattern? The pattern right now is just fluctuating between these two, both sides of the weighted moving average. So just abuse the hell out of it. And, but I'm waiting to see if it comes down to 360. Because the biggest, the only downside, the only risk here is you accumulate it here and then it breaks below 360. And then it comes down even lower. And that would mean the downtrend continues. Because we're going sideways right now, as I showed you. So if we break 360 and start going lower, that means we're no longer going sideways. We're actually starting a downtrend. Which means the price is going to start dumping. And we don't want to see that. So that's kind of like the downside. But as of right now, I mean, let's just continue to abuse this pattern, right? Because that's what we do. We abuse patterns. What's the pattern? Let's abuse the hell out of it so we can make the most money possible. That way you're not buying tops. Give me 1 second. I have to clean my glasses. Okay, there we go. All right. So as I was saying, I'm going to wait to see if it comes to 360, and if it holds there, then I'm going to start buying, and that way I have the best risk to reward ratio, right? Because if I start accumulating here at 4 and then it comes to 360 and then it breaks down, I lose a little more. So I'm waiting to get in as cheap as possible at 360. That way I have the best risk to reward ratio, right? Because I can have a tighter stop. If it breaks below 360 to, let's say if I stop at 350, I only lose 10 cents per share versus buying it here and accumulating it here, where I would have to lose like 40 to 50 cents per share. So that's my thought process. But you can buy and accumulate it. Why not? It's technically still undervalued while it's under the purple line. And if it doesn't come down here, then obviously I miss out when it does eventually pump back above that purple line. So that's kind of like, you know, it's a give and take. It's a give and take. Do I jump in now and like maybe I don't miss out on the next pump? Or what if it doesn't pump and it comes back to 360 and then it breaks down lower? So it's kind of, you gotta figure out what kind of risk you want to take. I'd rather wait. That way I have a tight stop at a 10 cent tight stop and only lose 10 cents per share. All right, guys, that's it for the video. As always, with regards, wait, isn't Trump in office? What am I saying? Trump is in office, so we'll see how that affects China and its stocks. Tariffs, if those. I don't know what tariffs. I don't know. We don't know what's going to happen. But the market as a whole right now is going sideways. That's why we bled on Friday. We're going sideways. We've been going sideways ever since Trump won the presidency back in November. So that tells me that the market doesn't know, like we're waiting for something. And we're going to get a big move on the markets. And it's going to be either very ugly or it's going to be beautiful and we're going to pump. Look at this. I'm just going to show you this before I go. So look at this. November 5th, right? November 5th. That green candle gapped up because who won? And then we hit a top of 152. and then a bottom of 130, and then a top of 153, then a bottom of 130, and we're literally going sideways since November. Since November, we have not created a new high on NVIDIA, which is important. A new high means we're still in a bull run. Every time we topped out, we created a new high eventually. Topped out here, new high. Topped out here, new high. That has stopped happening since Trump won. I don't know why that is. Don't ask me, but it seems to me like I would assume this is speculation, but the big players are just waiting. They're just waiting. They don't have confidence to continue pushing this higher. Because the small players don't move the stock. Let's keep it real. It's also possible that retail is buying up here and the big players are dumping it on us. And we're going to be left holding the bag if it goes down into a bear market. That's what, if this breaks down, we're going into a bear market. That's what that means. So that's why I'm saying, like, right now is the time to exercise caution until we get we're going to get either a volatile breakout to the upside, and we're going to go to like 200, or we're going to tank to 100. Like, it's going to be a big move when this breaks out of that pattern. As you can see here, we crossed under on the MACD. This is the MACD here. We crossed under, white line under the yellow line, and we went into a bear market. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 month bear market. But we didn't know you don't know you're in a bear market until you're like deeper into it. So that's why I'm saying, like, 1, 2, 3, 4, so 5 months into it, that's when you were like, oh, we're in a bear market. And as you can see, we're kind of we're teasing it here. If this crosses under, it has to be a fake out, or we're going into a bear market. I'm not saying we're in a bear market. I'm just saying the market is moving sideways, and I don't know why. I'm just speculating. It's just very odd that November came around and we just kept going sideways. So whenever we break out of that channel, we're gonna make a big move to either direction. So that's why I'm being extra cautious with all my stocks that I'm trading. I'm like, ooh, let's be cautious, because again, we're just small players. We don't got billions to be. We can't move the share price. If we alone as retail could get together and move the share price, then let's just get into GME and move it to 600, right, or 1,000. But that's not. Unfortunately, that's not. We don't got that kind of moolah to be able to do that. We don't have that power. If we did, the markets would be manipulated to yeah, you know what I'm trying to say. They would just be manipulated to hell. So, yeah, you got to play the game the best you can. I would say buy down here while it's undervalued, and be ready to sell it when it comes back to $5 plus. But as I told you, I'm just going to play it safe and wait for 360 if it comes down there. If not, I'll miss out. Oh no, boo-hoo, woe is me, I guess.